Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Monday and from the United States, we are waiting for the following economic headers to be released. The retail inventories ex-auto for month of September, goods trade balance for month of September, and Chicago Fed national activity for month of September. The importance is from low to medium. That's all for the economic calendar. We'll move on now to the numbers. On the last trading session of Friday, we have had a trading range from 1500 to 1518. Numbers are rounded and the market is closed. Gold spot printed a closing price on the last trading session of Friday above 1504. The number is rounded and the market is closed. Gold is trading in an uptrend above its all daily simple moving averages, and the momentum is seen in the short term weakening. For the RSI readings, it's moderate on all the charts, 66 weekly, 68 monthly, and 55 daily. And the supports are seen, the meaningful supports, about 1497.7, then 1493, then 1488. And for the resistance, it's 1505. If it cleared, we have to look for 1511.20. If it cleared, we have to look for 1517.8. That's all for the numbers. We'll move on now to the trading strategy. On the last trading session of Friday, gold and silver both rallied, but gold specifically couldn't keep the gains. The US equities rose following news that US and China are making progress in some sections of the trade deal, and the US dollar as well rallied following these headlines. In front of this combination, rising US dollar and rising equities, it's hard to see gold rising. And though we do have right now a shooting star on the daily chart of gold, but the outlook is still bullish, and gold should stay, theoretically at least, above 1500 on a closing basis before the Federal OMC meeting next week. Since it's the weekend, we are going to take the time to talk about the general market sentiment, in particular the US equities, because it's either going to rise and break gold or it's going to fall, and then the needed narrative for the new expected rally to take place in the precious metals markets soon. Please note that this is my opinion based on my study of the precious metals markets in general, gold in particular, and the financial markets in general. As we always say, gold is an annuity like stocks, and it's not going to pay you interest like other currencies, but it's the ultimate safe haven since the human race found it, and it's the parent of all of the other currencies because it's been used before all of them. And when I say it's the parent of all of the other currencies, I mean banknotes, plastic, or digital even. And gold is the king of them all without any debate. And when things are serious, you are going yourself to dash everything in your hand, and you will buy only and hold only gold. In my humble expectations, and please don't bank on my opinion, US equities and equities worldwide are going to fall into a bear market, and here is my reasons for that. Let's start with the first reason is why gold is up while it's in the declining phase of its intermediate cycle. In fact, gold is about to end its declining phase of its intermediate cycle maybe a week from now, and we did not see a dramatic move to the downside that's almost $60 away from all the year highs, which have to make you question what's going on around you, why the gold is still nearby the highs. What are the reasons that keeps gold nearby the highs? This is the first reason. The second one is the PE ratio. I talked about this earlier. PE ratio is the price per earnings, which means that how much earnings needed to get you the price that you pay for a single stock. This ratio should be around 16, which means if you buy a stock, you keep the stock in your hold for 16 years, then the dividends that you are going to collect from this stock, it's going to equal the price that you paid originally to own this stock itself. Now this ratio on average is above 33, which is not acceptable. Not acceptable for the rational investor. I know the stock market not indicative of anything. I want the rational investor. Is he going to buy such a thing that he needs 33 plus years to collect the price that he paid originally to buy the stock? This is also another reason. The third reason is the corporate debt is at all times highs. As I always say, the Federal Reserve Bank of the United States, maybe the members of the Federal Reserve Bank and the FOMC, always I criticize them for being so much cool about the economy while the economy is obviously not in a good shape. But imagine that they are talking now about the corporate debt and they are raising warning signs that the corporate debt is reaching a level that is not acceptable. So take this as reason number 3. For the reason number 4, there are some countries about to get into bankruptcy. Argentina is about to get into bankruptcy. This is not an easy thing when you see some countries incapable of paying its debts. And look also at the Middle East. There are so many countries right now are joining the round 2 of the Arab Spring, and this all tension could yield into something not nice, and some sort of a fear could slip into the financial markets and break the equities. The fifth reason is the global debt bubble, which is, as we know, all the countries almost around the globe are in debt, especially the United States, $23 trillion, and capable of paying it back because it's higher than even than imagination. So the bottom line, these are my reasons why I see that the equities in the United States and in the worldwide are going to break and to dip into a bear market, a long-term bear market, which will lend the narrative for gold to rise to maybe even a new highs to above 2000. But we have to wait and see how things are going to fall into the right way. For now and for Monday, how to trade, you have two options in my opinion. Gold with a shooting star could dip for the 20 days daily simple moving average about 1494 or maybe to 1497.7 because there is a strong support there. I am buyer there and I advise you to buy and keep it with you, or there is another strategy. You can wait until gold 17.8, which is the high of the last trading session on Friday, which means that the rally officially started. So again, you have two strategies to trade on Monday. Either you buy the dip around 1494 to 1497.7, buy from that area and hold to above 1500, or wait until gold break 1517.8 and the close above that level, which means that the rally started. If you look at the weekly chart, there is a bull flag and gold obviously about to break the bull flag to the upside, which means there is a rally of $250 is going to take a place, most likely is going to take a place. So let's, as I said, let's wait, be patient and see. This week is going to reveal so many things for us. Keep following us for that. Thank you for watching. I'll see you tomorrow in another video.